Good morning. This is Mayor Valensky with Driving Markets. Hope you're well. Driving while talking about markets. So a couple of apologies if the video is unclear or unstable. Then apologies on that. I'm going to have to try and find another phone holder in the car that gives a bit more stability from the bumps, etc., etc. Remember, anything said in this piece is an opinion only. It's not for investment advice and not financial advice. Okay, a couple of things also regarding media publication. I did yesterday a live streaming, so I'm experimenting a little bit with media and seeing how's it going, how's it going to be received, etc. So I might do a couple of more live streaming broadcasts on this YouTube channel, just to talk about markets live as they are rather than historically. So that's something I'm experimenting with. If you want to have a bash, then you probably, and you're subscribed, then you probably get a notice that I'm live streaming something along those lines. This is more or less going to be the last broadcast before the holidays. It's Hanukkah, it's Christmas, it's a holiday period. I might do one tomorrow, but that'll be a general overall informational broadcast on YouTube. Okay, so a couple of things I'm looking to do and I wanted to achieve this year was to get more and more subscribers and get the message out there. I'm probably going to look at getting some sponsorship as well. One of my very close friends last night texted me and said, why don't I get sponsorship? So yeah, I've already been approached by a couple of individuals, a couple of companies to sponsor. So there might be, I'm not sure how that's going to be received overall by the public and the viewers. So I'd like your comments on that. That would obviously bring some revenue and allow me to develop the channel even more. So that's something to look at. Okay, right. So yesterday the markets bounced back quite aggressively. The reason why they bounced back is because a couple of reasons. I mentioned last night in the live streaming that it looks like it's going for a Santa Claus rally. In other words, every year on financial markets towards the holiday period or towards the holiday period and the end of the year, there's a rally in equity markets. A couple of reasons for that. Number one, the main reason is the feel-good factor that individual traders and companies are feeling that there's a holiday period and everyone's going out to shopping and it's festive, etc. So that pushes the markets up. The other one specifically this year has been, as I've gone on about, I've laboured on about it non-stop, is that they want to claw back some of the losses from January 2022 to now. Those losses have been significant in certain sectors. If you look at the small caps and you look at the SPACs, which are the special purpose acquisition companies, then you'll find that they've lost between 95 and 98%. Those that went on the market from July, August, September last year, 2021, they've completely crashed. So there's huge amounts of money being lost in equity markets on speculative investments, and that loss of money has caused a degree of dry up of liquidity in financial markets. Okay, because obviously when there's money lost, then that's going to have a big impact on the investors or traders' ability to trade, because they've lost a significant amount of their capital. So that has a big impact as well. As regards the sector yesterday, one of the shares that shot up, one of the equities shot up, was Nike. Went up by 13%, beating analysts' expectations. So that pushed the market up significantly. Also, FedEx came out with better than expected results. And as a result of coming out with better than expected results, that gave a boost. But the market was looking for a boost in any case. It wasn't sitting there saying, what do we do now? It was looking for an excuse to go up. And yesterday it went up, and will probably continue going up today and tomorrow into the close before the holiday period. Next week's going to be quite quiet. The volumes will be much lower, and all the way through to probably January the 4th or January the 5th, you won't see much activity. Come January 2023, as I've stated beforehand, there's probably going to be, in 2023, not necessarily in January, in 2023 there's going to be a significant downturn. That is contrary to some of the opinions I've been getting from my colleagues, that they think 2023 is going to be an absolute bumper year. Could well be. I could be completely wrong. You can't be right all the time. Even I'm right some of the time, I'm happy. So that could be the case. I personally don't believe it's going to be the case because of the serious underlying factors of a recession, which I think is going to be heavy, and there's going to be rising interest rates, rising cost of living, and obviously rising energy prices throughout 2023, and that's going to impact on the consumer. Also, what I'd like to see is some comments from viewers of what are you looking for. So you can either WhatsApp me, or you can text me, you can send a message on the YouTube or on Instagram or on TikTok, and we could actually add in more descriptions and more market reports and analysis according to what you're looking for. And if there's a big enough demand on that particular asset class and there's enough time to add it in, then I'd be more than happy to add it in. Looking at bonds, I expect bonds over the next year to rise to about 4.59, 4.6%, the 10-year bond. Okay, and the 2-year bond to go to about 5.1. They've come off a lot due to rising equity markets, but I expect them to rise over the 2023 with the cost of borrowing to go up as well. Regarding crypto as well, Bitcoin struggled yesterday to rise within the rally. The crypto sector is under massive pressure, especially since the whole FTX debacle and BlockFi and other crypto exchanges and platforms going bust. They're going to continue struggling. As I said, I'm looking at 15,000, but I only have a few days left to achieve that. That's my target, and it might achieve it, might not achieve it, who knows. As regards the other shares I mentioned, which are focus on Meta and Tesla. Meta I don't like, but Tesla I do like. Unfortunately, Tesla is, and the analysts have downgraded it, and they're looking to take on, they're looking to drop even further as regards Tesla is concerned. What else have we got? In Meta, I expect around about to fall to the $70 level. So next year, I do expect a major market crash. I'm going to actually put that on the headline today. Again, expect a major market crash in 2023. And I think that will obviously have a big impact on overall consumer spending and corporate earnings, with unemployment rising across the board. So that's more or less it. That's my main focus, talking about the different asset classes. Should mention the dollar. The dollar yesterday was a little bit volatile. It's sort of hovering around, not knowing whether it's going to go up, going to go down. My view is that's going to get stronger in 2023. That's my personal view. I think it's going to get stronger, and I think not necessarily against the pound. So there'll be a lot of volatility there, but I think the pound overall in 2023 is going to go to around about the 125, 127. That's the level it's going to find in the next 3-4 months. We'll have to obviously take a look from there, because we can't measure the whole year with all types of geopolitical issues going on. I don't think Russia's going to withdraw from Ukraine. I think they're going to come to some sort of agreement where some land, some territory is going to go over to Russian control. Okay, that's it for now. It was nice talking to you up until Christmas, throughout the year. Maybe do some broadcasts next week, I'm not too sure, it depends. So I wish you happy holidays, have a safe one. This is Mayor Valensky with Driving Markets. Please subscribe, please share, and more than happy to have some feedback. Take it easy.